Hey everyone, this is Kirk here again at Option Alpha. So as you can see, the title of this video, talking about the spark that might light the fire. It is Wednesday, and we're a couple days away from the U.S. default if nothing happens with Congress and raising of the debt ceiling. So I want to go over a couple things, some things that maybe are a little bit interesting. I definitely had alerted to members last week that with the low VIX that it was absolutely a great time to buy some really cheap option premium. The VIX was low last week. Everything was coming up with this debt plan and the debt ceiling. So I told everyone that that's the best time you want to buy protection and buy put protection. So it really could have worked out in your favor today and may even continue to work out. I actually think that after today's big move down, I think we might get a day of reprieve here, but I think after that, I think coming into Friday, into the long weekend, and possibly nothing happening on Monday, I think that we're going to continue to sell off again on Friday. So possibly tomorrow might be a really good time to buy some put protection. If the VIX starts to crawl back down, just get some protection just for over the weekend. It's probably worth the investment to have that just on your books. This is just the Drudge report here, but again, just highlighting the fact that there really is nothing coming out of here. It seems like there's been pretty much a lot of stalemate, as always, with the markets and with the government. It seems like everything's going to be last minute. I think a couple of things I wanted to go over tonight were money flows, and then I want to take a look at some of the commitment of the traders, particularly the large speculators in the ES futures, which is the S&P futures contract. But if you look here again, I'm just on the Wall Street Journal page, and anybody can find this. Is just the money flow sector overview, and you can see that the weekly and the monthly flow has actually been pretty good. It doesn't really suggest that the market is too afraid of a U.S. default. So I'd really be concerned if money flow was at 4 or 5% out of the market. But I think that money flow has been okay. You can see down here just for the last week here that most of the money has been, a lot of money is flowing out of healthcare, industrials, consumer goods, etc. But some of the sectors like financials, oil and gas, technologies, and utilities have had some good money inflow. So that's been really good for the market. I think it's kind of hedged some of the downside risks that we have. I don't think that a lot of people would be necessarily running for the doors or I think that a lot of people would be running for the doors if they thought that the likelihood of not raising the debt ceiling was pretty high, or the likelihood of the U.S. defaulting was pretty high. So I think that right now, and I've always said that I think anything that the market sees on the debt ceiling, as long as something comes out and it's known information, I think the market's going to see it as a positive because the market hates uncertainty. So that's how I feel about that. And if you look at the commitment of traders, and this is the net commitment of future traders, we can actually take a look down here, and it's in the bottom left-hand corner, so it might be a little bit hard to see, but I can't scroll down as far on this screen. But we have the large speculators. And what's interesting, actually, is that the large speculators have really started to pull back some of their investments. And the latest data we have is from 7/19. So this is a couple days ago. I mean, it's almost a week and a half ago. And you can see that they were really bullish around 7/12. 51%, then they pulled back about 47. So I'd expect it's probably back down around 44% bullish. And judging by the chart right here, you can actually see that large speculators actually got really, really aggressive in their long trades right at the bottom. I mean, 614 is when the market pretty much bottomed the last time here. And that's right where large speculators got aggressive. And you can see it's right here in my blue oval. This is 614. That's really when the market bottomed. So when they get really aggressive, then you want to take note, right? So right now they are fairly short the market. They're net short the market. They're not net long. So, but they're not ultra short the market. They're not anticipating a huge, huge drawdown like we saw back in here. You can see here the large speculators that are really net short the market during that time period. So again, if we go to the chart here, you can see that when I posted last week about the market moving between these kind of bands and just bouncing up and down between these areas, same thing has happened. We've bounced considerably between these areas over the last couple weeks here, and that's all we've really done is just bounce, bounce, bounce. So I'd expect a bounce maybe to come really close to 1,300, maybe about 1295 on the S&P. I think the real story for traders this week is going to be the move in the VIX. The VIX has had a really, really good move over the last couple days here, and now has started to break out of these acceleration bands. And this is actually something that was pointed out by another coaching student. So, and again, just highlights the fact that how wonderful coaching is, not only for hopefully the coaching students, but for myself. I learned from the people that I talk to. But if you notice here, every time that the VIX broke out of these acceleration bands, and I've highlighted them all in blue, the market actually had a bottom very close to that. So if this is any indication of where the market may go in the future over the next couple of days, it looks like a short-term bottom may be coming very closely. Or very soon off in the distance here. So again, I want to go over these charts tonight and talk about that with you guys. I think the best move, like I said earlier in the video, is to possibly buy some protection tomorrow if the markets show a little bit of bounce. I think that Friday we're going to continue to sell off before the weekend. That's when everything's going to happen. A lot of uncertainty before the weekend is going to cause some investors to take profits and take money out of the market right now. So I don't think that the U.S. is going to default on the debt. I think that Congress and the president are going to do something over the weekend. God knows what, but I think that something's going to happen over the weekend, and we'll have some sort of resolution on Monday. As always, I hope you guys enjoy these, and happy trading.